You're listening to Southeast Radio's Business Matters, with thanks to Wexford Insurances. Wexford Insurances. More information at wexfordinsurance.com.
I'm joined now by David Avery, Head of New Business for Invoice Discounting in AIB Commercial Services. Good morning, David, and thank you for joining me.
Hi, Karl. Thanks very much for inviting me onto your show.
My pleasure. David, the reason I invited you in this morning is to speak specifically about the facility of invoice discounting. Over the last number of weeks, we received a lot of emails into the show from listeners that are running their own businesses that have serious issues in relation to working capital. Now, I know both in the US and the UK, working capital is usually sourced through invoice discounting, but it doesn't seem to be the case here in Ireland. What do you think the reason is for that?
Yeah, there has been a slow tick up on invoice discounting within Ireland. I think there's a lot of myths about the product, which hopefully we'll dispel during the course of this interview.
And what are some of those myths?
Well, that it's expensive, there's a lot of administration involved in the product. I think it's still perceived in some quarters as lending of the last resort, which isn't at all.
Before we get into the specifics of invoice discounting, tell me a bit about your own background.
Yeah, well, I've been in banking 17 years, all of which has been to do with invoice discounting. During that time, I've worked for Lloyds, also Bank of Scotland. It was with Lloyds that I actually came to Ireland. I've been in Ireland since August 07. Unfortunately, just as the economy changed, that's nothing to do with me personally, at least I like to think so. You know, my wife's Irish. We've despite the changes that have gone on here, we've enjoyed our time here and raising our children here. So I recently joined AIB November last year, and that's on the new business side of things, which is why I'm here to talk to you today. Tell
me a little bit about invoice discounting and how it works, please.
Well, Karl, it's a working capital product, and what I mean by that is, it frees up cash that is otherwise tied up in the sales ledger of a business. So typically if you're selling to people on 30-day terms, you know yourself, you don't get paid in 30 days. It could be 60, it could be 90 days. So we're actually making funds available to our clients when they raise their invoice. And often they're getting somewhere between 75 and 80% of that invoice value the day they raise the invoice. And then when their customer pays in 60 or 90 days' time, it releases the 20 or 25% that we haven't advanced on day one.
And what types of business is this suitable for?
The more simple the nature of the business, the more easier we find to finance it. So manufacturing, service industries where the service is performed and then the invoice is raised, distribution, recruitment agencies, food sector we like. What we struggle with would be businesses that are intangible, could be software development, anything that's particularly contractual. So in an ideal world, somebody would make something or perform a service, it's done and dusted, they raise their invoice, we finance it. If it's subject to contractual terms being fulfilled, we're always going to struggle with that a bit.
And what's the cost structure associated with accessing this type of a product?
Well, there's two main fees. There's an interest fee, which we call a discount fee, and there's a service fee. I suppose for typically a service fee would be somewhere around 4,000 or 5,000 euros a year, payable on a monthly basis. It could be higher for some of our larger facilities. And an interest rate, typically somewhere between 3 to 5% over base. Base rate at the moment is a fraction over 1%.
So how does this compare, let's say, to an overdraft facility?
Well, on our bigger facilities is actually cheaper because we tend to pitch our interest rate at a very low level. So for our smaller facilities where you have got that service fee element to overcome, that can literally be a hurdle and a bit more expensive than overdraft. But as our clients' sales ledgers grow, and our successful ones there, our facility is also growing, and there's no increase in the service fee in that respect. So the ability to borrow funds at a lower level on the interest will often counteract that. And some people will use this facility because it does free up more cash than typically an overdraft would, to maybe negotiate settlement discounts with their suppliers or buy stock in bulk. And that would offset the cost of the facility too.
And what process does a business have to go through in order to access this facility?
In terms of information that we like to see, it would often be the usual sort of stuff, last set of audited accounts, management accounts, but primarily a copy of the aged debtors. That would be the main starting point for us.
What size would a business's debtors book need to be before you would consider them to be a client?
Well, ideally, we would probably look for a debtor book around 200,000 and above that. On invoice discounting, we would typically look for funds out of no less than 150,000. So often we are looking at businesses with a turnover in excess of 1 million euro.
Now, the service fee you said is roughly about 5,000 euros. Is that an annual fee?
It is, but it's payable monthly, so that you're talking about something like between 400 euros a month, that sort of thing.
So that doesn't have to be paid up front?
No, and that covers some of our competitors would charge fees for their audits and for any additional work. That fee for AIB covers everything.
So once the facility is up and running, is there much paperwork and admin requirements attached to it for the client?
No, and that's another myth that's out there. I mean, it's all transacted through the internet. So our clients would typically go on once a week and notify us to say how much worth of invoices or credit notes they've raised in that period. They can go on as often as they like. In terms of paperwork, the only paperwork we see is a copy of their age debt report when they've closed off for that month. Yes, they would send in management accounts monthly or quarterly, but we don't see copy invoices. We're not drilling down to that level of detail.
Is there regular audits carried out by yourselves?
They maybe once a year, sometimes twice a year, and that would be a colleague of mine in our team. We would go out, they would be sample checking invoices to understand the audit trail that sits behind an invoice. That might be the purchase orders that are received, or the delivery notes, or the timesheets, whatever supports that invoice being raised. It's not drilling down to looking at margins, projections, not the financial side of it. It's to do with the sales ledger, the credit control, that sort of process.
Do debentures ever cause issues in relation to accessing invoice discounting?
An invoice discounter always is lending against the book debts. So the book debts needs to be unencumbered. Now, if that asset has been pledged for other facilities, then yes, that would cause a problem. So that asset needs to be free so that we can lend against it.
And does a business need to be a client of AIB in order to access this facility through yourselves?
No, not at all, Carl. I mean, most of our clients would bank with AIB or have some other banking with AIB, but no, that's not the case. I think, as I said earlier, I joined AIB at the end of November, and in commercial services, this is an area we're looking to grow in AIB. So no, that's not a prerequisite at all.
Let's say, for instance, for every 10 applications that are made today in respect of invoice discounting, how many of them are getting passed?
Yeah, I mean, there are always going to be the sectors, as I mentioned earlier, that we're not going to finance. Construction, one particularly, because it's so contractual. I mean, it's a hard sector to lend in anyway. Software development, where the product is so intangible, how do we know it's happened? There are always going to be areas that we're going to struggle to put this finance in place. I mean, a business also that is trading with heavy losses is not going to make easy reading. So we'd need to understand that this business is why those losses have happened, and what has the management done to turn this around. We are a little bit more flexible in our view of a financial trading performance of a business than if we were looking at this as traditional overdraft, because we're lending directly against an asset. So coming back to my original point, if the nature of the trade is simple and straightforward, I've got something to hang my hat on to say, I think this is a business we could support. But, we're not going to fund insolvent businesses, don't get me wrong.
David, over the past number of months, I've met with lots of business people that have gone to the banks for a range of different facilities, and they've been approved in most cases. However, the conditions attached to the facilities have prevented them from drawing it down. Is there any conditions that are attached to invoice discounting in that regard?
No, generally not. I mean, I suppose the areas that we debate would be the level of advance that we'd make against those invoices. I think I spoke earlier, typically 75 or 80%. So it could be that, we've proposed a facility at 80%, but it actually comes back sanctioned at 75%. Or there may be certain customers that we don't feel comfortable lending against. Maybe it could be export territories that we would deem to be unsuitable. Could be Saudi Arabia or something of that ilk. They would tend to be the conditions, but you're quite right. There's no point in having a facility sanctioned if, from my perspective, it's unsellable and it's unworkable for the client. That's not a sanction in reality.
How do you view export-related businesses for this facility?
Yeah, I mean, export, we can fund export. We suppose we would look at our clients' customers the same way we would do if they resided in Ireland or the UK. We're not going to want to be lending to debtors where, we perceive there will be a problem collecting the money back in the event that our client failed. So most of mainland Europe would be fine, America. Don't get me wrong, we would prefer our clients' customer base to mainly reside in Ireland and the UK, just because from our experience it's easier to get the money back in a worst case scenario.
David, I know that there's been lots of talk of redundancies, over 2,000 redundancies in AIB in recent times. I'm delighted to see that AIB have certainly grown the invoice discounting department, so they're obviously taking it very seriously and putting you in charge of that. How has the facility been accepted by local business people here in County Wexford? We're
trying to create awareness, and to be invited on your show is a fantastic opportunity for us. We're also trying to create awareness within the AIB group as well. So we have geared up in our staffing numbers. We're actually going to be 20 years old in May this year. But the product itself and the division, for previous couple of years, I think is something that's been left on the shelf. So since I've joined, there's been a real drive to grow the book. And I can tell you that, from what the figures I see, at the end of this month, we would have provided as much in new facilities as we have done over the previous 2 years combined. So, we talked about our deals getting through credit. Are we actually lending? Well, yes, we are. The evidence is in the figures.
You said at the very beginning of the interview that, look, this facility isn't for every business out there. And in that regard, I suppose you need to have about 150 to 200,000 euros outstanding on your debtors book at any one time for it to make sense, I suppose, both from the client's perspective, from a cost competitiveness, and secondly, from the bank's perspective. But what I'd like to know is, for businesses that wouldn't have that level of outstanding debt, what other options are available to them?
Well, I suppose then you're dipping into the more traditional overdraft lending. I know there are other initiatives through the government to provide finance. There are other players in the market. I'm also talking about invoice discount from an AIB perspective. There are a couple of independent players that specifically target a smaller end of the market that would provide factoring. So for your, one or two man band business or startup business, they could fill that hole too.
And how does factoring differ from invoice discounting?
Well, factoring would be where the factoring company provides all the credit control. It tends to be quite expensive, but I suppose from their client's point of view, they are buying a credit controller within their cost. So the factoring company would be chasing the debt, would be contacting their clients' customers. That's not what we do on invoice discounting, and we're not monitoring and drilling down to the level of detail that a factoring company would. So a factoring company would see every invoice that comes in, the cash would go directly to them. On invoice discounting, everything would stay the same as it does now, as if it were on overdraft. There's no change to the administration.
Thank you for coming in this morning and providing our listeners with some very useful information in relation to invoice discounting.
You're listening to Southeast Radio's Business Matters with thanks to Wexford Insurances. Wexford Insurances, #1 for business insurance in County Wexford.